Good afternoon, John Pryor here from Exalt IP, and I'm really pleased to have with me today two senior members from Claritas Tax. And I'm working with Claritas Tax because I really want to help more small and medium-sized businesses understand how they can access the innovation incentive schemes available from HMRC. And these are the R&D tax credits and patent box. So first, I'd like to introduce Matt Hodgson. Could you just say a little bit about yourself and what you do and why you do what you do?
Yeah, hi John, thanks. Matt Hodgson, I'm a partner with Claritas. I've been practicing tax for longer than I can remember, but best part of 23 years now. Coincidentally, my career started or thereabouts with the introduction of the R&D tax relief regime. So it's been around for an awfully long time. So I've seen the evolution of that. I've worked with companies, over the past 2 decades of all sizes on their R&D and patent box claims. I'm a transactional tax specialist by trade. So day in, day out, I advise companies and shareholders on, creating the most value and the tax structuring of their business. Yeah, that's me.
Thank you very much, Matt. And Caroline Walton, could you tell us a little bit about yourself as well? Thank you.
Thank you, John. I am a senior manager at Claritas. I joined our business in December 2020, and I lead the innovation tax relief service at Claritas. So I work with all different types of innovative companies dealing with claims for R&D tax relief, patent box tax relief, and also helping companies take advantage of innovation grant funding as well.
Thank you very much. So Caroline, could you give us a high-level overview of R&D tax credits and the patent box scheme, please, and how they can be used to help small and medium-sized businesses?
Absolutely, John. R&D tax credits and the patent box are 2 separate corporate tax incentive regimes in the UK. They exist to reward a UK company at different junctures of its R&D or innovation journey, if you like, and they're part of the government's growth agenda. R&D tax relief exists to reward companies that have spent money on advancing a particular field of science or technology. The reward is given through tax relief on certain categories of qualifying expenditure. And the benefit to a company ultimately is the payment of less corporation tax. It could be a corporation tax rebate or the ability to surrender losses generated in return for a tax credit from HMRC. Patent box is slightly different. Patent box exists to reward companies that are generating profits from qualifying IP rights. And the reward to a company in terms of making a patent box tax relief claim is a reduction in corporation tax payable on IP profits. Currently, that's a reduction from the main rate of 19% to 10%, although with the autumn statement, as from next year, that increase is going to, that benefit, is going to increase substantially.
Thanks very much. And Matt, I think you mentioned you're in the transaction side of the business. I think that's M&A. And how important, therefore, would these innovation tax relief incentives be in your assessment of a business when you're looking at them from a transaction perspective?
It's a good question. And I'd probably say there's 2 sides to that answer, in that we act with a lot of businesses, as I mentioned, on the sell side, but typically, 2 years out prior to a transaction. So there is value enhancement through businesses having identified and claimed these reliefs in the first place and done it correctly and ensured that, they've got robust claims. So a buyer will be looking to see that claims for both patent box, if available, and R&D have been made. And that they've been done adequately, thoroughly, and all of the costs available have been claimed. So you've got a great value enhancer there. But conversely, they can also be a potential detractor of value if they've not been done correctly. If there is no real narrative or work has gone into it. So it kind of works both ways. So that's why we work with businesses, on a kind of a lead out to a transaction to make sure full value is there. And broad brush, you could be looking at potentially 1 or 2% of value in these things. So but a buyer definitely is always looking to see that the claims have been done correctly.
Excellent. Thank you very much. And Caroline, I think you or Matt mentioned the autumn statement, the recent budget, and there were some changes introduced, I think mainly on R&D tax credits. Could you just explain what the implications of those changes might be for small and medium business?
Absolutely. Well, there are effects in terms of the autumn statement on the patent box scheme as well. I'll just explain what all the implications are across R&D tax credits and patent box, just for completeness. So firstly, the recent budget confirmed that the main rate of corporation tax will rise to 25% next year for businesses with profits of £25,000 and above. And that means that, as I alluded to earlier, the patent box will offer increased corporation tax savings for eligible businesses. In fact, it'll be a near 60% reduction in corporation tax that they'll have to pay. This is great news because historically the patent box has had a poor take-up in terms of the numbers of companies claiming, certainly in comparison with R&D tax relief. So I hope that with the increased tax savings that will be available through claiming patent box, that more companies will be interested in inquiring about the benefits of claiming patent box tax relief, even if they don't own or exclusively license in any qualifying IP at present. I'm hoping that it will lead to more patenting inquiry, certainly companies looking to find out how they could take advantage of the patent box. As regards R&D tax relief, the autumn statement definitely favours large companies claiming under the RDEC scheme. This is because the government has looked at the yield in terms of how much large companies spend on R&D. They're really wanting to get a return for money in terms of tax relief, and they're wanting to encourage large companies to spend more on R&D. And in the autumn statement, the government has confirmed that the credit will increase from 13% to 20% for expenditure incurred from next year. There are some changes for SMEs in claiming R&D tax relief as far as the SME R&D scheme is concerned. The Chancellor has unfortunately reduced the super deduction rate in relation to qualifying spend from 130% to 86%. And also the credit as well for loss-making companies is also going to reduce from 14.5% to 10%. So there are going to be some changes there.
Okay, that's really interesting. Thank you. And the final question to you, Matt. So if a company were considering a transaction, what's the right time for them to start getting R&D tax credits and patent box in place?
Yes. Well, really, it shouldn't necessarily be, pivotal on a transaction. A good advisor anyway, working with the business should have identified, earlier on whether there was a patent box or an R&D claim, but unfortunately that isn't always the case. So really, to get the maximum benefit, it's as I mentioned previously, it's 2 years out, so you can at least capture a good couple of years worth of claims, so that you can show that you've got a track record of making them, and therefore that value add piece that I mentioned earlier, that's more credible if you've got 2 years under your belt essentially. So yeah, I think broad brush, it's 2 years.
Okay. Thank you very much. I think that's about all we've got time for today. I think that's been really useful, so much appreciated, and hopefully we'll be able to catch up soon and give some more advice to people on innovation credit.
Thank you.
All the best. Bye now.